I am pumped because we have a ton of stuff to go over. S&P 500 futures are diving. NASDAQ is diving, except for NVIDIA. NVIDIA is up on momentum. We're going to cover that today, but I want to get right into it. Before we get into the U.S. data, one of the things I want to mention is we did have Fitch coming out this morning and threatening to downgrade the big banks, including JP Morgan. China in general fudges their numbers. Okay, so if they're reporting these numbers as misses, it's probably a lot worse than that. And that's something you have to be aware of. Now, again, how does this relate to the U.S. or anywhere in the world? Well, essentially, the more China struggles, they are now the second largest economy in the world. This means that we probably are going to see some sort of effect on them.
Hello and welcome to Money Talks. In this video, we'll dive deep into the captivating world of the crypto market and uncover the latest news in stocks. Get ready to stay informed and make smarter financial decisions. Now let's begin our enlightening discussion with Gareth Soloway.
Essentially, Fitch is doing exactly what Moody's did, and it's one of the reasons why I don't have it highlighted here or anything, because as of now, that's not that big of a deal. Now, if they actually downgrade the big banks, that would be new news. Right now, it's just repeating what Moody's said a week and a half ago. I digress. We move on. Check this out. Stronger than expected U.S. retail sales data keeps pressure on stocks and the Fed. So essentially what we have here, guys, and check this out. I got some data on this right here. Retail sales came in at 0.7%. Expectations were only 0.4%. Now, the reason why that's important here is that the higher retail sales go, the more inflationary, right? So think about this. If you have a limited supply of goods and more people are buying those goods, price can naturally and will go up because of the supply-demand curve. All right, so again, the more people are buying goods, the harder it is for the supply side to keep up. Thus, it equates to essentially prices going up. That is inflationary to see stronger than expected retail sales numbers. Now, this is where it gets tricky, right? You'd say, okay, retail sales numbers are good. This is great, right? This means the economy's doing well. Not so fast. And this is where I get into the stuff where I talk about how important it is to get it from the whole perspective. So you got a good economic data point, but it's inflationary. Now we get Empire State Manufacturing. All right, so this is a manufacturing signal. And this came in at minus 19 when it was expected to be only minus 1.4. So 1.4 was the estimate. Minus 19 was what it came in at. That's not good. So there's what you're seeing here is, to me, this is what you're seeing, guys, and this should scare the hell out of you, is that you're seeing the consumer, which now has over $1 trillion in credit card debt. You're seeing a country like the U.S. that is paying now $1 trillion just in interest. The consumer is still spending. The last data dump I want to bring up here that relates to this is the import prices. So we're importing as the U.S., we're importing goods. Expectation was 0.2% increase in import prices. Now, import prices are an inflationary gauge. They came in at 0.4%. So again, we're seeing the whole picture now, right? Retail, we're still buying. As a consumer base, U.S. is buying. We're buying, running up debt. The problem is import prices because of that are going up. And on the underbelly, manufacturing is starting to weaken. And remember, and I've said this now for months, is that there's a delay in the Federal Reserve hiking interest rates and how quickly it feels it in the economy. 6 to 12 month delay. If you go back 12 months, the Fed funds rate was only around 2.5%. 2.5%. We're now over 5%. So there, you could argue that there's still a 250 basis point impact of interest rates that the economy has not felt. And that's problematic. So we're going to jump over to this screen right over here, guys. So what we're basically looking at here is a tweet that I did, all right? And we're talking about China here. China, again, take a look at this, guys. So essentially, the second largest economy is in deep trouble. And I tweeted about this because it's important to understand what's going on. Retail sales missed, coming in at 2.5%. It was expected to be 4.5%. All right, industrial production missed, coming in at 3.7%. They expected it at 4.4%. Fixed asset investing missed big as well, 3.4%. It was expected to be at 3.8%. Now, the kicker is this, guys. So this isn't everything in China right now, but this is what started to freak the futures out, the S&P, NASDAQ futures in the overnight, and actually caused the dollar to start to gain some traction and some other things, right? We're even seeing the 10-year yield is continuing to push up. We'll look at that chart. But what you have to remember about China is that China in general fudges their numbers. Okay, so if they're reporting these numbers as misses, it's probably a lot worse than that. And that's something you have to be aware of. Now, again, how does this relate to the U.S. or anywhere in the world? Well, essentially, the more China struggles, they are now the second largest economy in the world. This means that we probably are going to see some sort of effect on them. All right, now, here's another key. All right, China, there's been a lot of data on this. The youth unemployment rate in China is 20+%, even in the 21 to 22% range. They announced that they will stop reporting the youth unemployment rate. That means it's getting worse. All right, if it's going to improve, like think about this logically, right? If it's going to improve, you don't say, hey, we're going to stop talking about that. All right, that's an issue, guys. And 20% unemployment in youth, that's major. And that's a headache for China as well, as the regime is going to have to deal with those people and, again, figure out how to make them happy.
Don't forget to join us as we explore the unfolding events. Why is BTC price flat? Let's take a quick look at this topic. Then we turn back to Gareth Soloway. BTC price stagnation. Bitcoin's stagnant price reflects trader uncertainty amid conflicting signals. With factors like potential ETF approval and Fed interest rate decisions at play, investors are hesitating to predict BTC's next move. ETF optimism versus Fed rate hike. Concerns. Market sentiment is divided. Optimism about a U.S. Bitcoin ETF approval supports the $28,500 support level. Conversely, fears of a Federal Reserve interest rate increase boost the U.S. dollar, aligning with Bitcoin's pullback from $31,800. Awaiting Fed meeting. Bitcoin's flat trajectory could persist until the Fed's September meeting, where rate decisions will offer clearer market direction. Uncertainty prevails as market players balance these contrasting influences. Bitcoin's price action and the crypto market structure are beginning to mirror the pre-bull run activity seen in previous years.
Head and shoulders. I'm going to teach a little bit about a head and shoulder pattern here. This is the Ethereum chart. All right, so the Ethereum chart, by the way, literally no movement on crypto. With all of the data that I just talked about, with the stock market doing this, China doing that, Japan, crypto, Bitcoin, nothing. I mean, at some point it will wake up. But this is why, by the way, you have to be a trader that trades everything. All right, because when crypto's dead, I trade stocks. When stocks are dead, I can trade crypto or commodities. I can trade them all at the same time. Heck, you even can dabble in real estate when real estate's good, right? And so again, by learning everything I teach in the Winning Trader series, I think it's really important because it can be applied to everything. All right, so here we have, check this out, guys. On this chart, there's something called a head and shoulders pattern. All right, in fact, I'm going to go over here so you guys can really see. And essentially a head and shoulder pattern, you can see right here, bear with me as I freeze this up, right? So here's your shoulder, here's your head, and here's your shoulder, okay? So when we look at that shoulder, and this is called your neckline, from this, basically from the armpit of the shoulder, right, to the armpit of the shoulder. You connect a trend line right through there. That's called the neckline. Now, head and shoulders have actually a relatively high failure rate compared to a lot of other patterns. Oftentimes, a good pattern will be successful 70 to 75% of the time. I would say you're closer to 65 to 70 on head and shoulders, but that's because they sometimes trigger and then fail by getting back above. What is triggering? Let's talk about that. Triggering only occurs when price gets below the neckline. Price must break the neckline to trigger. Now, once it triggers, this is why head and shoulders are actually really cool. All right, yes, they have a slightly higher failure rate. By the way, how does the head and shoulders fail? If it closes daily candle below here and then closes back above, failed. Done. The break point and holding that break point is the key. That is the key. But basically, to calculate the target on a head and shoulders pattern, what you do is you take the highest point of the head, you drop a plumb line straight down, you take that distance, and then you, from the break point, wherever it breaks on the neckline, you do that same distance. Now, What's amazing about this is if you do that, so it's basically like a measured move. You're getting this distance, and you should get that distance to the downside. All right, now what's crazy about that is that if this occurs, this brings us to approximately 1,100. So if this trend line breaks and this head and shoulders plays out, you're talking about an $1,100 target on Ethereum. Will it happen? I don't know. It hasn't triggered yet. For all we know, Ethereum's going to go like that and never trigger. If it triggers, then it's possible.
And that concludes an insightful episode of Money Talks. If you enjoyed the video, don't forget to give it a thumbs up and subscribe to our channel for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing